Hey everyone, and thanks for jumping back into the cryptoverse. Today, we're going to talk about Bitcoin, and we're just going to be continuing to follow this incredible move that we've seen over the last 2 or 3 months. If you guys like the content, please subscribe to the channel, give the video a thumbs up, and also check out the Telegram channel, which you can find a link to in the description below. Let's go ahead and jump in. So, the move continues, right? And here we're looking at the price. It's currently 25,734. We even had a go at around 26,000 not too long ago. In fact, on some exchanges, I think it did get to $26,000. Okay, and if we zoom in here on this exchange on Bitstamp, and maybe it did get to 26,000 on this one. Looks like we had a wick right around it, so around $26,000. So with that said, we made some videos recently talking about overextension of the price of Bitcoin. How far could it go and to be on par with prior moves? Remember, one of the ones we looked at was the log of the price over the 20-week. This is a natural log. I got a comment saying, oh, did you realize you were doing the natural log on Wolfram Alpha? Yeah, that was the point. I wanted to do the natural log. Now, because natural log is base E. If you look at the overextension from the 20-week in 2019, we are almost there. We still have a little ways to go. For us to get there, it would imply a $27,000 to $28,000 Bitcoin if we go there within the next week. If it takes 4 more weeks, then it could even be higher because the 20-week moving average is monotonically moving up right now. Okay, so that's the first metric. We see that we are closing in on that overvaluation. Again, the second one is looking at it in terms of the macro scale, right? And looking at this general long-term downtrend and realizing to get to this point, we would need to go to a $30,000 to $31,000 Bitcoin in the short term. If it takes us another month to move up, then it would be even higher. We also know that this one will eventually break because eventually it would imply the price is below the 20-week moving average perpetually once we get below zero, which obviously does not make sense. The other thing in this video that we want to talk about is the logarithmic regression band. So the fair value regression band. So this one is fit to quote unquote non-bubble data. And generally what it does is it helps us identify entries into the market, right? Entries into the market, entries into the market, and entries into the market. It also tries to help us identify points where you might want to consider that the party's almost over. Now, one thing that some people misunderstand that watch this channel is the idea of taking profits, okay? The idea of taking profits. And the reason they misunderstand it is because a lot of people think of this more so all-in or all-out approach. If you say you're taking profits, to them, that means you think that's where the top is. But, as we've said many times, we're much more practical than that. I don't know where the hell the top is. Right? I don't know where the top is, and I don't claim to know where the top is. What I want to do is always and systematically take profits anytime a bubble forms. That way, if it continues to go up, I'll continue to have more that I can take profits with, and if it comes back down, then at least I took profits, right? So that's the general idea. Just because it goes higher than the point where you started taking profits is not a bad thing. In fact, it just means you can sell more. We also do it dynamically, okay? So if you are taking profits, as we've said before, right? Imagine you take X profits here, or I generally use the nomenclature of Y. So let me do that. So X is for buying, Y is for selling. So imagine you sell Y here, and you sell 2Y here. Then 3Y would be up here, and then 4Y, and then 5Y. What does this mean? Well, it means if you add this up, you get 15Y, and let's say you have 15 Bitcoin. You solve for Y, Y equals 1 Bitcoin. So at the first level, you might sell 1 Bitcoin. At the second one, you might sell 2. At the third one, you might sell 3. The fourth one, you might sell 4. And the fifth one, you might sell 5. This is my strategy, okay? And I recognize that my strategy does not suit everyone, especially when you see the price continue to go up. The problem is that when you sit back and say if you sit back and just watch the price go up and up and up and you don't sell, then obviously you feel good about yourself in the short term. But then at some point when price does turn around, you'll look back and wish you had sold some. It's happened many times, right? It happened in 2011. It happened here. People were holding and holding, and then eventually it came back down, and it ultimately crashed, right? 90-something%. Here is another example where it went up really high and it did not preclude it from crashing 86%. Another example in 2017 where it went up and then it did not preclude it from crashing another 84%. So we know that eventually a crash will come, a major 80 to 90% crash, that crash could be years away, right? I mean, if we're in a multi-year bull market, it could be a long time before that happens, and maybe what we're seeing here are smaller short-term bubbles like we saw in 2019, right? We had one in 2019 that some people tend to forget about that took us up to 14K. We came all the way back down. There are a lot of people looking back at this point, and they're like, why did I not sell anything, right? Why did I not sell anything? So my strategy is not to just buy and hold forever like I know it is some people's strategy. And that's an okay strategy if you're okay with what that means. My strategy is to buy when the risk is low and to systematically sell dynamically as price goes up. That's my strategy. It does not suit everyone. And you know, if I'm taking profits here and taking profits here, it does not mean I think that the price can't go up. It just means I want to protect myself in the event of downside risk. That's all it means. As I've said before, it's not about your returns. It is about your risk-adjusted returns. And where does that leave new people? And that's one of the most common questions I get. Because, you know, a lot of people, if you're watching this channel for months, when we were over here, we were aggressively accumulating Bitcoin because the risk was less than 0.5. We were also hugging the 20-week moving average. And whether Bitcoin went down, up, or continued to hug the 20-week moving average, we knew that more than likely altcoins would bleed against Bitcoin. And that's what happened. So we continued to solidify the Bitcoin position here, just like we had been buying all of this time as well, but solidified it here because it was testing the 20-week as support and also below 0.5 risk. And then we get to reap the reward as it goes into a manic mode. And to some degree, we're still theoretically at the beginning stages of a bubble, right? We're not even fully extended up to the upper regression band yet, and there's no guarantee we're going to get there in the short term. Though we could, but there's no guarantee that we will. So again, my strategy entails systematically taking profits, and that does not mean it's always to USD. Sometimes those profits go to Ethereum. So it's maintaining market exposure, but putting it into a less risky asset in terms of its price movements recently. Of course, Ethereum, from a fundamental point of view, is more risky than Bitcoin. Obviously, institutional investors are going to start with Bitcoin. They might not have any interest in Ethereum, though I think some will, and some already have. But generally speaking, if you know, Bitcoin is the main one, right? That's the one that should be the majority of your portfolio. If you find yourself coming into the market cycle late, right? Let's say you didn't have the ability to accumulate over here. As I've said before, you can always accumulate up to a higher risk level. I just prefer not to, right? I prefer to accumulate when we were down here, which is where we talked about, you know, for over a year of accumulation. And there has to be at some point where you stop buying, right? Because one common thing, you know, that I've seen that I want to address is if I stop buying, say at like this level here, and price continues to go up, that doesn't mean that I consider my decision to necessarily be a bad decision. It just means that I'm happy with my position and I want to let the rest ride. Because as I've said before, I expect Bitcoin to go to 6 figures, right? That's an expectation over the next few years. I expect it to go to 6 figures. So of course there's going to be some level where I stop buying and I just want to let it ride for a while. But again, there also has to be a cutoff point. And if you want to be more aggressive, you can make your cutoff point higher. You could take it up to 0.6 risk, 0.7 risk, whatever it is. You can of course take it to a higher risk level than me. So just to reiterate, to get overextended from the 20-week as much as we were in 2019, we would need to go to $27,000 to $28,000 in order for us to get as extended as the macro downtrend top would imply. In the short term, it would imply a $31,000 to $32,000. And if we are overvalued by, let's say, if we're overvalued from the fair value, here we were overvalued by about 190%. To be 190% overvalued from this point, it would imply also approximately a $31,000 to $32,000 Bitcoin. So just note that if we get to that level, it is essentially the same level of overvaluation in terms of the 20-week moving average that we saw in 2019. Okay, so these bubbles can exist within the grand scheme of a macro bubble, and we'll see exactly how high this can take us. If you look at the weekly RSI on Bitcoin, it's getting pretty high, right? It's getting pretty high up there. And if you draw a line where we currently are and go over, you can see during the last market cycle, there were only 2 times where we even went slightly above where we currently are. The current RSI is around 89. There were a couple times in the last cycle where we went slightly above 90. Okay, so we're getting pretty close to what our tops were in terms of the weekly RSI last market cycle. So maybe we'll cool off soon. Of course, it could come with a major blow off top before that. Hopefully this video is informative. If you guys like the content, subscribe to the channel. Let's get to 80,000 subscribers. Give the video a thumbs up. Also check out the Telegram channel in the description below. Remember, we also do have the premium list. You can check that out in the description below as well. Check out the holiday sale. We'll keep it going a little bit longer. You get access to the weekly reports, the weekly videos, the trading view indicators, the risk dashboard, the alerts channel on Telegram, and a few other things. So make sure you guys check it out. Subscribe. Let's see if we can push higher to 26,000, 27,000. I'll see you guys next time. Bye.